Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. You're here to take us beyond the bell. It's a global simulcast with Massar and Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms. Another herky-jerky day here in markets, Massar, but the net effect of it all is most of the major indices right now are in the red, and this looks like we're continuing a downtrend that has really unfolded over the last couple of months here.
So what do we have? 40% of the market cap reporting this week. Can they turn it around, including some big mega cap tech names? We'll see whether or not this trading trend continues in terms of equities. However, one group that's really outperforming anything it seems to do with leisure, travel, hospitality. I'm looking at the S&P Super Composite Restaurants and Leisure Index up 2.6%. Super Composite Hotel Index up about 1.6%. I'll tell you a little bit why Carnival's on the move in a moment, but nonetheless, Scarlett, that world is on a tear.
I'm looking at the intraday chart of the S&P 500. It's just slow rise up and the slow descent. Is this what it looks like when there's no Fed speak?
Well, I don't know. I woke,
That's a good
logging
point.
in this morning and keeping an eye on the markets, Scarlett. We saw a decline of up to more than 0.7% on the S&P 500. Then it just moved higher for most of the day, and now it's declining. I kind of thought today was going to be a fourth down day in a row.
Well, it's funny.
Well, it will be, I guess,
well,
but not significantly. Yeah,
well, I mean, but we are moving lower here. Interesting, though, too, I mean, on that point, the column that we had by Mohammed El-Arian on the Bloomberg earlier today really got into that idea of just how much Fed speak is sort of causing volatility. And he kind of pointed out just in the last appearance by Jay Powell at the Economic Club, just how much Treasuries moved off the back of those comments. And it really raises the question here as to whether the commentary, the public commentary, is as useful as maybe the Fed thinks it should be. All right, we are getting the closing bells here in New York. Let's round out the day with the Dow Jones Industrial Average down almost 200 points, or roughly 0.6% here on the day. The NASDAQ Composite is going to hold in the green, up by about 34 points, or about 0.3%. And you could thank most of the Magnificent Seven for keeping that afloat. But take a look at the S&P 500. A trade today below 4,200, a close above 4,200, but still down 0.2% on the day. A fifth straight day of declines. That's the longest daily losing streak for the S&P 500 in 2023. The Russell 2000 also lower on the day. Carol, down by 0.9%.
All right, and a quick check on the S&P 500. Romaine, if I dig a little bit deeper, you're talking about most names in the index, 375 to be exact, to the downside, 137 higher, one unchanged. But, you mentioned volatility, and Scarlett, if you look at the VIX, it's actually down about a point in today's session, which how do you get your head around that considering the trade that we saw today?
Yeah, well, I mean, the moves were not, actually they were for the S&P 500, but the VIX has not been the greatest signaling tool for a while now. Let's take a look at the sector performances. 7 out of 24 groups finishing in the green, and as Romaine mentioned, Magnificent Seven, and you can see that with chip makers, media, entertainment, software services, leading to the upside. On the downside, you've got transportation stocks, energy, and banks, all down by at least 1.5%.
All right, let's get to some of the individual gainers in the S&P 500 and the NASDAQ 100. Top in both of those is Walgreens Boots Alliance. That stock up as much as 6% at its highs today, finishing the day with about a 3.3% gain. JP Morgan coming out, raising the company's rating to overweight from neutral. The analysts there saying there is clearly work to be done. Talks, though, about this healthcare-focused management team, a refreshed healthcare-focused management team, and a lowered but credible bar. She really puts a lot of focus on the new CEO, Tim Wentworth, bringing what he brings to the company, especially his expertise, his knowledge in the healthcare space. So definitely singling that one out. Do you want to mention Carnival? I talked about hospitality and leisure, really on a tear today. This was a top name in the S&P 500 earlier today. One of the company's corporate directors, Randall Weissenberger, reported an insider stock transaction to the S&P, so buying about $1.15 million worth of shares. Stock's down about 19% in the past month, so maybe he saw a little bit of a bargain there. It is up about 43% year to date. Airbnb, again, that hospitality leisure outperformance today. This was top in the S&P and NASDAQ 100. Investors warming again, I guess, to the sector. It's interesting to see this, but you saw Airbnb. I'm just going to take a look at it, up about 3.3% in today's trade. And I do want to mention NVIDIA was also top in both the S&P, planning to make some ARM-based PC chips for Windows. That was a Reuters headline earlier today. Just thought I'd.
All right, NVIDIA's gain, Intel's loss, which I'll get to in just a second. Romaine. Let's start, though, with Chevron. Shares finishing the day down by more than 3.6%. Let's round that up to 3.7. Worth taking a look after the announcement that the company is going to buy Hess for $53 billion. We know the details. We've been talking about them all day. $171 per share for Hess. It's a premium to about 10% of the 20-day moving average price. The acquisition will give Chevron a significant foothold in Guyana. That's the South American country that borders Venezuela, Brazil, and Suriname that have found oil over the last 10 years. Let's look at shares of Intel. Carol mentioned this, but just in the last hour, Reuters reported that NVIDIA is using ARM Holdings tech to develop chips that would challenge Intel processors in personal computers. Shares of Intel falling just after that report, which Bloomberg ended up matching. Shares of Intel falling by 3% today. We should note that it ratchets up competition between the two semiconductor makers and continues that fight between them. And then FMC, the worst performer in the S&P 500 on a percentage basis today, it fell by as much as 26% earlier today. It was the biggest intraday drop since 2020. It's the company slashing its adjusted earnings per share guidance for the third quarter. In the wake of that, Wells Fargo cut its price target amid weaker trends in Latin America destocking. We also saw peers of FMC, it's the agricultural chemical company, fall. Shares of Corteva, Nutrien, Mosaic Company, CF Industries, all falling today as well.
Yeah, this is a big story, and I'm surprised. I mean, I know it's kind of a more obscure company, but you talk about the importance of the global economy here, and the idea here that when these fertilizer makers are hit, remember, this is more of a climate change issue that they're dealing with right now. So these could be longer-term structural issues that could affect investors going forward. Let's check in on what happened in the Treasury market, and of course, everyone knows Scarlet was up at about 5 a.m. this morning. Sometime around 5:40 a.m. New York time, we saw that 10-year yield scrape past the 5% mark for the first time going back to 07. As you can see on your screen, though, that did not last. We're actually down almost 15 basis points from where it was earlier in the session, and down 6 basis points from where we started the day. So interesting moves to see that whether that 5% was kind of the line in the sand to bring buyers back into this market. You also saw most of the rest of the curve also shift a little lower here on the day, with about 7 basis points lower on that 30-year yield. I am curious, though, guys, there's been a lot of speculation as to sort of what caused this swing, both the jump higher and then, of course, the bump lower. And a lot of people are pointing to a lot of things, but they're also pointing to the tweet, or the whatever you call it, the social media post by Bill Ackman, saying that basically he's throwing in the towel on the short, and saying that he's concerned about geopolitical risk and that it's just not a safe time. And then Bill Gross coming out and kind of saying something similar, that, you know, there's an embrace of safety right now. And I wonder how much that fed into sentiment.
Yeah, it's a nice round number that gets people's attention, and it's as good a reason or a time as any to come in here and say, you know what, maybe I'll come in. One thing, of course, that it's had is the impact on equities. This marks the first Monday that the S&P 500 has not gained in 16 straight weeks. So we've snapped the 15 straight Monday gains for the S&P 500, which was always a little bit curious. It was a weird phenomenon 2023.
Yeah, that's an interesting trend break, if you will. Gina Martin-Adams was on earlier from Bloomberg Intelligence. She said a third of the S&P 500 companies are above their 200-day moving average. A 200-day moving average, excuse me. She says you look for 50% to be above that mark if you want a sustainable uptrend. So I have to say, I feel like all of the market conversations we had today, Gina, we also had Ann Maletti on, I feel like they were very subdued, if you will, in terms of the equity market and the concerns, you know, that are facing maybe a lot of companies out there. Yeah,
Ann Maletti, you know, sort of argued with us that even though we're, you know, not in a recession defined by the data right now, and we're still seeing job gains each and every month, that in a lot of parts of the country, and she's based in the Midwest, she would argue that, you know, a lot of people do feel like they're in recession, with car payments above $1,000 a month, people, housing affordability out of reach, food prices going up, Romaine.
It's called the real economy.
It is called the real economy.
And I don't say that to be glib. I mean, it's for some
great
reason.
gut check, right?
But it's hard to reconcile that with the numbers that we get every month.
Yeah. Well, we asked her about, so what do you make of the retail numbers? She goes, I don't get it. I really don't get it, because you've seen even the high-end luxury that are supposed to be, you know, sustainable no matter what, and even you see some, you know, problems there. So it's confusing, I think, to say the least.
It just puts the pressure on companies to really wow investors one way or another if they want to generate some kind of big reaction in the stock, because just delivering on a beat is probably not going to do it. Given what BI has found out, Bloomberg Intelligence has some data showing that investors are not exactly rewarding companies that have narrow beats, at least so far.
So what does Microsoft do tomorrow, right? Like you think about some of the big ones. Does that kind of, I don't know, change the tone, the trend? I don't know. And we are in this vacuum where we don't have the Fed speak.
Why would it? But I mean, that's the problem. I mean, if it's just going to be Microsoft and Nvidia and Apple, Amazon, and Meta. That's not a market. I'm sorry, it's not. That's a basket of stocks.
Right, but it has definitely shaped the overall market trends often, right? And even though we talk about it being so concentrated in the handful of a few big names, it does swing the momentum.
Well, talk to me when they're buying oil and gas companies and fertilizer companies and tractor companies and things like that. Yeah, I mean, I'm not knocking you. I'm just saying.
No, I don't disagree, right? But we say it over and over again. Then we see that trend of like investors just moving into some of those names that aren't representative of the broader market, if you will. All right, I guess we have to wrap. All right, guys, that's it for the cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals. We will see you again, same time, same place tomorrow.